We put this graphic out a couple of weeks ago and talking about the difference from the spring market into the fall. And we got a lot of feedback and a lot of questions about this. And it goes with a lot of the data that we're seeing in the market today with home prices, ever so slightly changing in value and the market changing too. With interest rates going up, they're pushing close to 7% today, along with versus where we were in the spring at a 4% interest rate. Let's say we started January at 3.25, but very quickly we're 4.5. And so comparing the difference in the market and the price of the homes is significant because we saw most homes selling for over list price and 20, 30, 50, $100,000 over, especially in this $500,000 range. So this chart compares those together and shows you the cost over 10-year period, because when you buy real estate, it's not buying it for the short term. Real estate is a long-term investment, unless you're a house flipper, right? And that's not what 99.9% of us do. We buy real estate and hold. I've owned my home for 15 years. I own my other properties for 6 and multiple years. And so you're buying this for a long-term investment. Well, the market news, especially today, showing builders are pulling back. They got burned real bad 2006, 2008, and they were continuing to build back then. Well, now they've seen that happen, and they know, and they're pulling back, and they're not building as much home, and as many homes. And it's what that's going to do is it's going to constrict the market. So many economists believe that the inflation will start to be under control come early spring next year. And once that happens, long-term bonds will get cheaper. So mortgage bonds, the 10-year treasury note, and when those things get cheaper, interest rates go down. And so once that happens, you're going to see people flood back into the market like we saw this spring. And then you're going to have a shortage of inventory at that point where the overbidding is going to happen. So opportunity lies when there's fear in the market. So when other people are fearful, be strong, right? That's always been said in investing. And it's the same thing in this situation with real estate. So you'll see prices come down. You've seen price reductions, even though year over year we've seen real estate values go up. But you'll see the values ever so slightly come down. You'll have opportunities for seller paid closing costs or to do temporary buy down programs like a 2-1 buy down, which decreases your cost, for the first 2 years of owning the house. And you don't have to overpay for them. There's still houses that people are overpaying for. Homes selling the first day on the market. There's not an abundance of inventory out there, but there are opportunities in the market for you to purchase and refinance it when that time comes to get that lower payment. But if you're going to jump back in that market, 6 months from now, 12 months from now, when the rates come down and everybody else is jumping back in, you're going to see things come back around to this spring 22 number here with not as quite a low interest rate, because I don't think 4% is really attainable. But you see them come back down towards 5.5 or 5%. Everybody's going to come back in that's been waiting for that moment. And so the opportunity lies when not everybody's doing it. So evaluate that, think about it, and ask me any questions you guys want to. So I'm here to help you. I'm your advisor. Just let me know. Thanks.